Good morning, everyone. It's February 4th, 2025. I have on the wonderful Robert Marson and David Barris. Having fun this morning, loving David and Robert's shirts. They've got their collars up, all for you. Robert, yeah, there you go. There you go, looking so snazzy. Select Water Solutions. What are you working on here?
Yeah, Select.
What is it? Tell me about it.
It's a company that has pipelines that treat and dispose and recycle water in the Permian and all over the country in the major oil basins. It's an oil service company, and it specializes in water. So it's not a water company per se. If it were a water company that was treating industrial water, it would probably be triple the price today because those valuations are 15 times EBITDA, and these guys trade for a paltry 5 times EBITDA. But they also have
WTTR, just so people know. WTTR is the ticker, right?
Yeah, it's because it's headquartered in Houston. If it were headquartered in Philly, it'd be WODR because we say water up here.
Look at that joke for the morning, but All right, Robert.
So, free comedy.
Free. Yeah, this is not only an investment program, but it is stand-up as well. So, Robert, have you talked about this name before?
I have.
Yeah, I vaguely remember this one. So what's been going on since you last talked about it?
The stock, we got in the stock in the 7 to 8 range, around to 15, and now it's pulled back and it's been hovering between 12.5 and 13.25. And at 12.5, my finger's on the trigger. It's a large position. I haven't added it. I was thinking around 12-ish or anything with an 11 handle I would add because the company has 3 business units. The sexy one is the water recycling business, but they also have chemicals and they also have water delivery. So they have this full cycle where they have an exchange where they can make buyers and sellers of water, producers of water, which is a waste stream that then they could treat and then reuse for fracking. And they have the biggest in the Permian Basin, the largest pipeline network in the basin. And there's only really one other competitor that's publicly traded called Aris. So these guys get to recycle First of all, you have to understand produced water. Most people don't understand this. When you produce a barrel of oil, it actually floats on top of 6 barrels of water. That's what you get in the barrel. So it's in the tank. So you have to dispose of that water. It's contaminated. You can't do anything with it. So it's old school for the last 40 years. They just piped it down and piped it away and pumped it down old wells that had stopped producing water. That causes earthquakes in certain parts of the country. So that has been restricted on what they do. Yeah. So for environmental reasons, they're trying to turn over all the produced water that they can treat it and reuse it with the fracking water, which helps not only the disposal, but also helps with the removal of water from the freshwater tables and the rivers. And that's an environmental friendly way to operate as well. Plus, the big oil companies like Chevron, Exxon, Conoco, they want to increase their eco-friendliness. And to say you're using 100% recycled water in your fracking is something they like to put on their website in their sustainability.
But isn't DEI a bad word these days? Is it?
Yeah, there's no genders or colors to the water out there. Right. It's environment.
Robert, what? So, I see a big ramp here, though. I see this huge ramp around right before the Trump election, right? And then it's been up and down since then. So how does somebody think about the valuation here? Obviously, given Tariff Town going on here, could be more production, looser rules. Does that help or hurt them? How do people think about how they're going to make money on this thing?
Yeah, more production is a big positive, especially if it's drilling for natural gas, because they own all the pipelines in the Haynesville, which is the swing producer for natural gas volumes in the U.S. The gas that comes out of the Permian, our biggest oil field in the country, is associated gas, meaning they don't give a crap about it. They produce the oil. They make enough money drilling the wells and selling oil that the natural gas sometimes it's considered a nuisance to get rid of. But they're now harvesting it and creating NGLs out of it and shipping it, the NGLs, the liquids, propane basically, to other countries. It's become a big business, particularly like in Africa and Latin America, where they need fuel at a cheaper price than gasoline or diesel. So the natural gas business is going to grow for dry gas for fueling data centers and onshoring, but the drilling of the natural gas, particularly U.S. land based companies, is now the end thing in the oil service sector. Not that the oil service sector is thriving, but they had their deep water move, they had their international stocks had their moves. This is now the most conceptually appealing part of the oil patch for the oil service guys, the drillers in the U.S., particularly for natural gas.
How do you make money
Water,
on this? Like, where are we going to? How do you make money
well,
on this stock?
that's not hard to figure. I got that. By the way, water production in the U.S. grows 5 to 6% a year in units. That's a growth business. You got to pay $1 a barrel to get rid of it. So every time it grows 6%, that's a pretty high unit growth number
Sure.
for any industry that's not technology related. PepsiCo doesn't sell 6% more snacks every year. Coca-Cola doesn't sell 6% more Coke every year. But these guys, the industry produces 6% more water every year, making it a tailwind to fuel the growth. So these guys have a lot of new pipelines starting up this year. And when that happens, there's going to be a step function increase in their sexiest business, which has that pure comp I talked about, Aris. Aris trades for about 8 to 9 times EBITDA today. And when I bought this at 7 and change, Aris was 8 and change. And I like the story for water treatment and water recycling so much that I almost bought Aris as well, but I have so much energy in my account portfolio with pipelines, the oil and natural gas pipelines, particularly the master limited partnerships, that I really couldn't afford another one. So listen, when these guys have their step function increase in EBITDA in the second and third quarter of 2025, there's going to be a massive aha moment and a revaluation in the company's EBITDA multiple compared to its biggest competitor, Aris. So I would say this stock should be 7 to 8 times EBITDA with Aris at 9. And it's just that the two businesses that were not related to the pipeline and recycling business, they call that the infrastructure division. They've had some sloppy quarters. There's been a slowdown in drilling in the U.S. I don't think we're going to get drill baby drill. We will get chill. We will get chill baby chill from the natural gas LNG business. They're going to definitely freeze a lot of gas and ship it abroad. And they're going to use a lot of gas for data center electricity production, I would assume, in the next 3 to 5 years. So natural gas is still a unit growth business, at least 4%, 5% a year. When that's it, that's not a bad unit. So that'll produce even higher growth in produced water. So this company is going to have a growth spurt in the next 12 to 24 months that is going to surprise the heck out of Wall Street and drive the stock up to, in my opinion, based on at least 20. And if people get more friendly to oil service in general, right now they hate oil service. And this is the best house in a bad neighborhood. Okay. The second best house. Aris is the best house in bad, but this is the second best. So when oil service comes back into vogue and these guys start posting 30, 40% revenue growth in their sexiest business, the water infrastructure division, the stock should at least go to $20 to $23 in the next year. That's how we get paid.
All
So
right.
what
And
could
so
go
what
wrong
what are
then?
people not getting? Yeah, what could go wrong? And also what are people not getting about this step function? Because it seems like something they've telegraphed, or what do people not understand?
Yeah, what got the stock up was the last quarter. They had a mediocre quarter, but they talked about and they said they're taking down pipelines to repurpose them. There's so much demand for their service, they have to take a water pipeline that brings water to the Permian, and they have to shut it down and repurpose it for taking the water away and moving freshwater delivery and then moving it into the recirculation network. And that's two different expenses they're bearing. But they talked about the first quarter being very strong and they hinted at it. So people bought the stock on that news. And then it's just been consolidating because there's only so much upside you can get for one piece of news that says, yeah, our first quarter is going to be very strong and the rest of the year should grow sequentially. Now they have to deliver on that growth. So people are big. These pipeline are 5-year deals with 2 to 3 year paybacks. They're baked in the cake. All these orders are baked in the cake to treat all this produced water. There's nothing that could stop it. The if oil goes to 50 the way Trump wants it, he wants the oil companies to voluntarily increase production to drive down the price of their own commodity. So you tell me how smart that would be. I don't think that's a smart thing to do. So I don't think we're going to get $50 oil because the volume goes up a lot. But if the volume of new drilling goes up a very large amount to increase production that much, then these guys are going to benefit in the short run. In the long run, when oil goes down to 50, they'll suffer. But in the short run, they'll be a very conceptually appealing stock.
David, you had a question. What was the question? What could go
Well,
wrong?
what
That was
yeah, what could go wrong? Like what could send this down 20-30%? What's the part where someone goes, "Oh, I got this wrong"? What's the highest likelihood of the lever that could be to the downside?
As I shared with our subs yesterday, valuation isn't necessarily always a backstop, especially in a bad market. So I bought that Weatherford at 5 times EBITDA, and yesterday you could have bought it at 4 times EBITDA, and EBITDA is probably 10% lower. So wasn't a fun trade. That was not my finest catching. My strategy catches falling knife, and I got the knife right through here. The 5 EBITDA multiple is not an absolute backstop. So if oil did plunge to $50 or $60, and it's not acting very well these days, it did rally from 67 to 80, and now it's already back to 71, and nothing's happened yet. So if oil were to break 60, the sentiment for the oil patch would turn very negative, in my opinion.
Yeah.
These guys have that water recycling business, and that water production is going to grow no matter what. So this should remain the best house in a bad neighborhood, but it's hard to see the numbers unless they have a company specific execution screw up. It's hard to see how the stock could go to $10 or below $10 because that would put it down to 4 times EBITDA and from 5. And I don't think that that's likely, but that's how it would happen. The sentiment on oil would change, driving the price of oil would change, driving the sentiment on the oil service stocks lower. And even though this is half insulated from that, because half their EBITDA comes from produced water, which is an annuity business, the investors would sell first and ask questions later, in my opinion.
And sorry, just to wrap one more thing up before we get to David, is that the company hasn't announced a lot of these initiatives that you know or believe are baked? Or what do people not get that's coming? Or is this just they want to see the proof in the pudding before they give the valuation bump?
Yeah, they've been talking big numbers for 2 years now, and there was a little lull in them bringing these to the market, but it finally coalesced to where the demand now, it's a network effect, and they had the network and built it, and they said they would come. It was slow to develop, so people were skeptical, correct.
Okay. All right. Thanks. Now, David, on to healthcare land. Lots of news out there. I know you're looking at a lot of different things. And I had asked you, what's up with Merck? Is that a buy? What are your thoughts?
So I bought a little bit with it down 10-11% this morning. Maybe it was down 12, but I tried to bottom ticket, but really just it was a huge disappointment. So if you say everything's great, so everyone wants to have just tell me the story. Tell me the bad
Yeah.
news. Tell me the bad news slowly. Give me a hint that today was like a splash of cold water. They said, oh, by the way, we're not selling Gardasil in China anymore. We're not sending any more shipments. We're going to keep selling it. But guess what? It's not selling. And our $11 billion target for it, we're going to withdraw that. And so someone just on the conference call said, wait a second, if you think things are going to return to normal, why are you withdrawing the peak sales number? So there's a lot of, hey, I don't know why I should trust you. And pharma's been just in the target for years now, first with the idea of we're going to negotiate prices. And once that got passed, to me, it's the game is on because it's something that's easy to expand. It's hard to undo. If you say, okay, now we're no longer going to, now one of their big products, Keytruda, goes to the price negotiation in a year, but the reality is it goes off patent in a couple years. So this price negotiation thing is kabuki theater for healthcare and the government. That said, if you're a PM at a giant firm, you're not saying, oh, this is the golden age. Science-wise, it is. But if you're that interested in science, then just own some of the smaller biotech companies that are near their lows. Again, I had already owned Merck. It's underperformed for a long time, but then I just added a little bit today as a trade. I don't think that there's anything that they've said so far on the call that's going to get people excited to own it. I think though, when you see a large cap company like this down
That much.
12%
Yeah.
on a miss earnings, it's a trade. On happier news,
Yes.
let's talk about Hims, because this
Are
one's
you
a great one.
dancing over there? Are you just dancing?
What makes it sweeter is because we had two colleagues that like publicly went on to Twitter.
Yeah,
One
like
has a
rant,
Substack,
rant.
thousands of subscribers saying, Hims, it's a red flag
Yeah.
alert, and it's this and it's that. And that was at $15. And then it was repeated over and over. And look, I get stocks
What do
wrong.
you have wrong, David? What do
Well,
you have wrong? I'm just kidding.
yeah. So exactly. And so we remember that. And I get stocks wrong all the time, but this one I was adamant about because I think, the message that I want to convey on this isn't, hey, look at the stock, it's up
Yeah.
a lot. That I do want to do that, but that's pretty blatant.
I'll do that
It's
for you.
more, it's more though that some folks focus on narrative, and that's how they invest. Is the story getting better? Is it getting worse? Are there risks here? Can I make a story about the risks? I always think that the numbers are the most important part, and the narrative has to fit it. So you can have something that's discordant, and then you have concerns. But here, you had subscribers doubling year over year. You
Right.
had revenue growing 30-40% quarter over quarter. Everything's going in the right direction. And then they add a new thing that was controversial, the GLP-1s.
Yeah.
But if you just take the base business, things were great. So it was hard for me to think that at $15 or $20 that, oh, this is something you should short because,
Right. Right.
and so to me now at $40, what do? They have the Super Bowl ad coming up this weekend. And by the way, in I think a week, it's been up 23%, 25%. So it's been on fire. It
Right.
had it had a 30% short interest too. So there were
Yes.
people getting carried out on this. And so I haven't sold a share into this.
Okay.
Attempted today to sell half or a third because does it get much better than the couple days before the Super Bowl ad? And so,
Maybe it does if more people say, "Hey, what's the price differential for one of their is it a shot or whatever it is?"
oh, it's like a tenth of the price. So it's not
Yeah.
so much even, it's not, so their ad, if you haven't seen it, is great. It's positioning the company as, look, these drug companies are taking advantage of you. They've priced these GLP-1s to make money. It's okay.
Yeah,
Ridiculous
what do you
ad.
think you're doing? Yeah.
But they're saying it's the system that's at fault. The system
Okay.
is rigged against you, consumer. And what I do think is great about that is because if you go to himsandhers.com or hers.com and you're interested in weight loss, you might sign up for something else, like a
Sure.
skincare thing, acne thing. And so this is more about getting patients to the website and getting them onto a drug. And I think it will be very effective at that. Plus, the press alone for their just doing that has been great. That said, this is a stock that I think over a multi-year period will do great. I think telemedicine is going to help a lot of people. Do I think that at $40 they need to put up a giant quarter and really give good guidance? Yeah. So
Yeah.
I can own half of it. Again, I haven't
Yeah.
sold any yet. I might do that today, tomorrow. Part of me likes just not like letting the
Hold.
winners run. And
Yeah.
Bakes, by the way, called it. I had these same concerns a week ago, and he said, "Look, if it crosses 34, you're off to the races." And I'm not a technical analyst at all. When I hear that, I'm like, "Oh, that's tea leaves and stuff." But
Yeah.
so no, it's not a victory lap. It's more to just remind people like the narrative is great and all to focus on, but if the numbers don't match, then throw away the narrative. Just focus on the numbers. Someone's going to buy it. I did want to.
Congratulations. That was a huge
Yeah.
call. I call the whole debate, what did I call it? Brisket, because it's just something I can't take too much. It got
Yeah.
but that was a great call and congratulations. So I would
And
definitely,
it wasn't even just about a call though, Robert, right? Because like on
yeah,
one side there was a lot of emotion, and then on the other side there was data. And I think that's really what we're about here is can we look at the data, whether
yeah,
it's technical data, whether it's fundamental data, whether it's macro data, and say, what should you expect?
That
You
that
can't
was
always get it right, but David was on the data, and I think that's the key point from this.
But the stock had gotten killed, and it was too cheap for its growth, and he stuck by the fundamentals, and the stock wins. That's fundamental. It does beat, and innuendo and that. Now there were people saying it operates a little shady, so you have to be careful. That was always the issue. That's
That's
different.
different.
But
Yeah.
but I would definitely take the 1/3 of my stock at triple the price if you have, and then you take 90% of your capital out, not your shares, and still keep the shares if you think it's going to keep running. If you don't, then you sell half of your bond.
Yeah. I agree. The old saying of no one ever lost money taking profits is a great one. And it's so tempting to, but I will definitely sell some piece of it. But whether I'll do the half, but I like the third. I do the third. So that's,
I like the 50. I like the 50 because there's going to be increased volatility in the markets, whether it's this name or not. You might just get to buy it back even. Anything else on the healthcare or biotech, David, that you want to share today? I know there's going to be some stuff behind the paywall that people are going to want to see, that we're not going to give out all the juice here in this squeeze. So maybe do a little headline of what that is for paid subscribers before you go into anything else that's public.
I'll put this behind the paywall, but I've said this before about Bausch Health at BHC. I believe it's a zero. Now, they own 88% of Bausch and Lomb, BLCO. I call it Blowco. It really does stink as a company. The rumor was a couple months ago, that, and I believe that it was planted. In the FT said, oh, someone's interested in buying Bausch and Lomb. And I don't think there's anyone that's interested in it. And sure enough, about a month later, someone came out, the FT said, oh, by the way, Blackstone, or one of the partners, TPG, that was going to buy it, is backing out. But then they fired one of their advisors and hired another advisor. And that is never a good sign, right? You never.
Yeah, it didn't work. You tried to pimp yourself out. Yeah.
So many people are interested in us. We're going to switch to someone else.
Banker. Right.
And if you look at Bausch and Lomb shares, Blowco or BHC, the stocks don't look like someone's about to buy them. Now, I do care about that. I just don't think that's going to happen. But I just want to walk through just one piece of the puzzle, which is the debt. So they have roughly $20 billion worth of debt. And if we think of their debt maturities, let me just get this in front of me. Sorry, I should have had this ready.
That's all right. I'll give you a second.
Yeah. So they have $2.7 billion due this year, another $6.7 billion due in 2027, and $7.2 billion in 2028. Now, I want to double check that because I just did this very quickly. So don't count on that. If you're listening, that's great. So you want to double check those numbers. But maybe free cash flow of $1 billion, maybe we'll call it $2 billion. Doesn't really matter because they have less than
$1 billion levered on the cash flow.
Yeah, and they have less than $1 billion cash right now on hand.
Yeah.
Now, okay, they also lose their biggest product in 2028. Generic competition comes in, and what happens, by the way, before a generic comes out? About 6 months beforehand, the wholesalers just say, "Oh, we're going to work down the inventory." They don't carry way
New
expensive
stuff,
inventory. So I would figure out that in about a year and a half, you're going to start to see that weaken. But if you're a debt holder and they have maturities through, I forgot to explain what's beyond that. Beyond that, they have huge debt. So if you're a debt holder and you're going to refinance, why would you take anything past the maturity, past the generic expiry?
Right.
If you go past the generic expiry, I believe there's
cash flow?
There's 100% chance you will never get paid if you have debt past the generic expiry. I believe that to be the case. Now, but then you say, okay.
What are people not getting? Are people not doing that math, or what are they hoping?
If you look at the stock, it's a $7, $8 stock. So the people are doing it. But they did say, hey, listen, we're going to try to restructure the debt. I don't think that there's any way to restructure it past the generic expiry. So then what's I believe the only other option is to do a
cram down the equity. Yeah.
Yeah. And you could probably short either the debt or I believe one that I could short either the debt or the equity and make money on it. I am short the equity. I think it's a better, more liquid, easier way. Now, where could I get hosed in the short term? You know what? They sell Bausch and Lomb for whatever the $6 billion market cap is right now. Because again, the enterprise value is a lot higher. You're not going to get I don't think you're going to get a big premium. So you get $6 or $7 billion. You pay down the near-term debt. The 2028 debt, you're done.
It's still there.
So you might get a pop in the stock if they can clear up the near-term debt.
Yeah.
But in the long term, you're done. So I think this is a zero. I think that the hedge fund managers that own a lot of this stock, if I were Carl Icahn and I were Paulson, who are on the board, I'd be going, wow, this is an unsolvable situation. And by the way, they've been on the board for a few years saying they're going to solve it.
There's not that much short interest. Why is there not for Bausch Health? Why is there not that much short interest on this?
I don't understand it, but I think that under $10, people who are short, they get a little nervous. And like I said, they could refinance the debt and get squeezed. But I know a couple people who are short at very big funds who think, yeah, it's small. I'm like, It's not that small, but that's why
no, it's not. We're talking about $2.6 billion market cap company. That's not a small. Yeah, but it does take 5 days to cover. It would take 5 days to cover. So this isn't in terms of the float and the like.
That's why I think the longer term debt is the better short. But for me, as an individual investor, that's just it's not easy to locate. It's not easy to do. It's a good one the more you dig. But
yeah, looks good. Anything else that you want to share or hint at that people can get behind the paywall?
No, but I'm going to go through this. But one of the things that I would suggest people do is if they're not getting smart on AI, it's such a great tool to cut through. And if you just type in, pick the company, pick Bausch Health, pick whatever, if you're using the right model and you ask the right questions, it will walk you through everything very simply. And again, you have to double check the numbers and things because they do have hallucinations sometimes. I would just suggest that because I know we have a lot of people.
Use it as a tool, you're just saying.
A lot of people who are watching this a lot of people are new to investing. And since we're doing this, for free and for this week only, really for free on X, I would suggest if you want to get smart on investing, there are easy, cheap ways to do it. And one of the things you can easily do is put into a large language model, tell me the bull case on this, tell me the bear case on this, and then dig down further on your own on those things.
And do they also get to know the narwhal?
They will not. You mean Narman?
Narman, sorry.
The half narwhal, half man thing. But no.
For those of you, David also is a genetic creator of interesting animals, if you want to call it.
Chimeric biosciences. Chimeric biosciences. Well, just imagine the possibilities. Robert, imagine if you had a tiger that was with a kangaroo or a mink with a kangaroo, you could have a coat with pockets. Think of that.
The chinchilla.
Have to go to work. That's a good idea. I'm going to work on that.
Well, anything else to share, David?
No, that's it for today. When we were getting to crossbreeding animals that were probably
that we're done. Listen, it is February 1st. Thank you for joining us. You have a water solution, energy related here, probably interesting for those looking at tariffs and might get some vol in that name on the upside, as well as some great healthcare picks from David. So thank you for joining us. Robert, David, Nadine here for Wall Street Beats. Thanks.
Thanks.